If you want to become a consistently profitable trader, you don't want to miss this video. In it, you'll learn the path to becoming profitable directly from our New York City trading firm, along with the exact training technique that the traders on our desk use to become profitable, and the step-by-step details of a proven and powerful setup that can help get you there. This is not information the average retail trader has access to, so stick around. You're going to love this. Hi, I'm Mike Bellafiore, Managing Partner of SME Capital, a proprietary trading firm located in Midtown Manhattan. I'm also the author of the trading classic, One Good Trade, and the PlayBook. Go ahead and click our subscribe button so you don't miss any of our trading videos produced for the trading community. So the path to consistently profitable trader is 1, exposure to trading setups with edge, with training. 2, experiment with trading setups with edge. 3, develop a playbook of setups best for you. The playbook, that playbook is your trading business. And finally, trade your playbook in real time. And hey, not the other trades.
So let's get into that powerful training technique and that powerful trade setup so you guys are armed with a technique and a trade for you to improve. My second book that I wrote is called The Playbook. And in the playbook, I map out and outline how to use this powerful training technique to help you improve as a trader, how to use this powerful technique to build your business. And it's a technique that we use daily on our trading desk, on our P&L trading desk. So our desk needs to make significant P&L to pay for all the stuff here in New York City, and we don't make money off of commissions, and nobody puts money in capital. The firm fully backs traders, and we split profits with them. So we need to make money to do well. This technique essentially is something that we teach all of the people we hire at the desk and train up to consistently profitable, and then the best of them into 7-figure traders, and then the best of those even better. And it's something that's carried on as guys are getting really good. So even guys who are 7-figure traders are still employing this training technique to build a trading business. So what we do is we archive a setup that makes the most sense to us at the end of each trading day. So let's say you see a trade during the day, whether you're in it or whether you weren't in it. You figure out the variables of that trade, you deconstruct it, and you put it into this SMB playbook template form, so you're getting a pretty clear picture of the important variables and the best way to deconstruct it so you can use it going forward. New and developing traders build a playbook. The second part of our training program in-house, we call trader development. And during that period of time, one of the habits that we want to make sure goes into the routine is for them to do a daily playbook trade, and for that to go into their playbook, and for them to build this playbook. This playbook then becomes their trading business. You'll hear on our desk, after guys have built the playbook, comments like, particularly from the better traders, I want to just stay in my lane. I want to trade my playbook. And so when you're a developing trader and when you're an experienced trader, you're archiving these really A+ setups that you're seeing during the day that make the most sense to you, that you like the best, and you're putting them into your playbook. It's a playbook that actually sits on your trading desk. This is your trading business. And when guys veer outside of the playbook, that's when they're overtrading, that's when they're getting into lesser trades. The idea is to do more of what you do well and bigger. By understanding exactly what your business is with this playbook first, then you can do that. So we talked a little bit about the path to consistently profitable trader. Exposure to trading setups with edge, with training. So you want to be exposed to the different ways that really great traders are making money at prop desks and as short-term traders. If you're not exposed to those trading setups with edge in your training, you might get fooled into thinking it's your psychology or it's something else. You need setups with edge. You need to experiment with trading setups with edge. You can be a pretty decent trader. If you're trading setups without edge, you're not going to make money. Period, the end, full stop. And we spend a lot of time on our desk studying whether or not our setups have edge and making sure that our setups that we're trading have edge. You want to develop a playbook of setups that are best for you. So you get exposed to lots of different types of setups, and then you want to gravitate towards the ones that are best for your personality and your cognitive strengths. This playbook, that's your trading business. You don't veer outside of your playbook. That's overtrading. You don't take lesser trades. Those are trades outside your playbook. Trade your playbook in real time. Again, period, the end, full stop. Hey, and not those other trades, not those lesser trades. That's the path to a consistently profitable trader. So I think what we'll do here, guys, is we'll put this, Kurt, we'll shoot this with Kurt and put this in. So let's talk about a daily chart consolidation breakout. Let's talk about a trade. It's very powerful that we use daily on the desk for you to co-op into your trading playbook and for you to co-op to trade in real time. When I think about a setup, I want to understand the variables that are important to it succeeding. Remember, we talked about setups with trading edge. The variables that are important to me for a breakout trade are, hey, is this above an important technical level on our daily charts? In this setup, is there elevated R-vol, relative volume, during that trading session? When I look at the breakout, am I seeing volume spike into that breakout? Am I seeing a sharp move away from price when we get above that breakout price? Is the stock holding above VWAP? That is an indicator that is the most effective indicator that we use as intraday active traders. When I look at the pullback, is there decreasing volume into that pullback? So I want to see a push far away from the breakout area on high volume, and I want to see a shallow pull-in on decreasing volume. When it's pulling in, am I seeing buying on the tape into that pull-in? Is it hard for it to go down? I want to see the market overall in my favor. I want to see corresponding stocks or that sector in my favor. I'd love for a particular breakout trade to also have a news catalyst. I'd like for there to be an announcement out recently that gives people more confidence that this company is going to do well going forward. And I want that news to be unusual, and I want it to be unexpected. So I want there to be an announcement that they've beaten profits for the full year. They've beaten guidance for the full year by a lot, and people didn't expect that. I want to see maybe they've got a new drug. I want to see maybe their new product that they're selling is doing better than they thought. I want to see more people are potentially going to their site and spending more time on their site. The news should be unusual. It should be unexpected. And it should give confidence in institutional buyers to put on big size for 6, 8, 12, 18 months out. I'd love for it to be in a hot sector. I'm going to show you an example of that. I want short interest to be on my side, so I'd like the short interest to be high if I'm buying a breakout. that causes people to have to buy the stock, and I want to hold until there's a reason to sell. I don't want to be feeling the pressure to have to sell this and take profits too quickly. I want to be able to capture a decent part of this move. I want to see that there's now a reason to get out of it. We call that a reason to sell. So those are variables that go into a really good breakout trade. And what I often see as a difference between the elite traders from the underperforming traders is they're not crafting their playbook trades with the variables that are important to a really good breakout trade. And I'll give you an example of that actually with the trader I'm working with in a bit. The advantages of this trade, of learning this trade and archiving this trade and putting into SMB playbook form and putting it into your playbook, is that you're trading in the same direction as the largest market players. When something has a big breakout, there are big institutional, large hedge fund, large trading, big money traders behind the idea. That's where you're seeing, that's why the elevated volume is there. That's why the push away from price, that big spike to the upside is there. That's why that's there. It's helping you capture moves that are relatively stronger than the market. That's a very key principle for traders. We want an excellent return on investment. We need to be making a lot more money than the overall market. So if the market is up 10%, I mean, our traders aren't making 10%. They're making many multiple times that. In fact, it's not even a measure that we use because our traders are so much more efficient with capital than the S&P. This active trading that we do allows us to be able to outperform just a regular performance of market. We want to find tremendous risk-reward setups. So downside of 1, upside of 3, 4, 5, maybe even 10 in the very best. You're going to be able to walk into home run trades. So we're going to hit a lot of singles. We're going to hit a lot of doubles. But then this is a trade where you can walk into a home run while also controlling your risk. It's a very scalable trade, particularly in the large caps and the high beta names. You can trade it very big. You're going to see this trade opportunity every day. This certainly is best in a strong market, but also holds up well in other market conditions. What I really like about this trade and what we're doing a lot of on this desk is that we're expressing it both with stocks and options. So if you're better at options than you are at stocks, you can use this setup to express edge. If you don't like options, you only like stocks, have at it with stocks. But one of the things we're seeing with our best traders as a path of growth for them is that they can express this with stocks and with options. And so it allows them to get bigger because now they have two different ways to put the trade on. And so they'll have a bunch of stocks, they'll have a bunch of calls, and both are working nicely. And psychologically, for whatever reason, it enables some to be able to trade these with more risk. And that's what you want, particularly when you have a trade with edge. You want the odds on your you want the odds on your side. I mean, that's what trading's about, is what are the setups where the odds are in your favor? And how do I put more money to risk when the odds are in my favor? Very recently on our desk, this very setup, one of our traders made 170,000 plus in Tesla, a daily breakout trade. One of our traders recently made 40,000, another made 20,000 with options in a DBX breakout very recently. So I say that because these are setups we're using on our desk. These are setups that we're using recently. These are setups that we're going to continue using. It works in all markets. It works in all sectors. It works in all regimes. And what I mean by that is, when I say it works in all markets, it really does. And I don't just mean like the difference between a futures market and an equities market. I literally mean US markets versus a foreign market. So one of the traders who I work with on a daily basis, who I love, is a 7-figure trader, and he trades with tremendous size. And he actually has to trade with tremendous size because his market, the Australian market, doesn't offer as much movement as the US markets. But he also trades with tremendous size because he's a very good trader and 7-figure trader, and enjoys the challenge of being bigger and better. And so we exchange, well, he sends me a daily report card, and he does so with another very large trader friend of his from Australia as well. And so this other friend of his is on the exchange as well. And myself and this other trader provide feedback to the 7-figure Australian equities trader. And in one of the report cards, well, not in one of them, but in a few of the report cards, I noticed something that kept coming up. And I noticed that while he was making a tremendous amount of money, that he needed some work if he wanted to trade even bigger and trade more consistently with his breakout trades. And he needed work very specifically with his variables that he was considering. And I talked about this at the very beginning. You need to be considering the variables that really matter. You need to be putting them into your playbook template trades that you're archiving. You need to be developing these breakout trades with the right variables. And it wasn't that this trader was bad. It's just that he needed to be better with his playbook trades, with the variables he was considering. And I noticed that he wasn't using RVol enough, and I noticed he wasn't using the volume into the breakout enough. And I said, hey, let's make a list of the variables that you want to see for your A+ setups and breakout trades. And I said, let's start really paying attention to RVol and volume on top of the other variables that you're thinking about, like a news catalyst and technical levels and the tape. Let's really start to do that. And he did. And he did start focusing more on RVol and on volume, which he hadn't in the past, and he started to see better success in consistency and ability to size bigger and in profitability, because he was adding 2 more of these variables with heightened focus into his playbook trades. So big takeaway from that is we're seeing this trade work in different markets than just US equities. The fundamentals of the particular trade I want to outline for you guys to learn how to think through this trade, for you guys to walk away armed with a setup that you can use, you can start using with your trading. So the fundamentals for this trade, and we break down a playbook trade in a very specific way. So we want to take a look at the news, the fundamentals of a particular company. All right, and so in this case, I'll go through the other variables, but one of the variables that we really need to go over are fundamentals. So Dropbox is a recent IPO for $21 a share. Dropbox is in a hot sector, the cloud storage, the cloud computing space. It doesn't really matter what space this is in. What matters is it's hot. Those stocks are doing really well. There's no recent news catalyst in this, which I actually really like, because a lot of the teaching that we do here, we talk a lot about a news catalyst in something. And so we're going to get to remove that from an example and show really good profitability in a trade absent that. The ATR on this particular stock, it's about $1. Look at the RVol on this particular day. Look at the RVol. Look how elevated it is. 13 plus. 3 or better is a stock that's really in play. One of the things I like to use RVol for is to confirm that I'm trading a stock really in play. 3 or better is really nicely in play. 13 is things just absolutely in play. It essentially means that it's doing 13 times the volume that it does on a general day. Price range, short float, not really on our side in this particular trade. That's okay. You're not going to get all of the variables that you want in all your trades. That's okay. But if you get a lot of them, that helps you make trade decisions. Average volume's good. We can get in and out of the stock, 4 million. It's liquid. All right, the big picture. So the big picture is, how is the overall market doing and how is the overall sector doing? You got to start there. You can't just trade a stock in a vacuum without understanding how is its sector and how is the overall market doing. We want to take a top-down approach to making trade decisions. So you can see the SPY's in a range between 279.20 and 277.80. The SPY opened up strong but sold off in the afternoon and consolidates in a range around 278.50. The Qs rallied strong through yesterday's highs and had just recently made a new important high in Qs. Tick on that day was strong, opened up really strong. Anything above 800 on tick, that's an indicator that we really like to use that studies and tracks how overall stocks in NYSE are doing. So we're getting a high tick, a positive tick, staying positive until 10:15, showing overall market strength off the open. And really, I think the most important part of this big picture for this stock excuse me, is that IQ and HUYA are recent Chinese IPOs, and they had just made new all-time highs on this day. So the IPO sector of the marketplace was really hot. So you're in a hot sector, but you're in this segment of stocks, recent IPOs, that are really, really hot. And that's bringing positive sentiment towards tech names and IPOs. So the big picture is, hey, this is a recent IPO and others are really running. That matters. So we take a look at the SPY on the daily charts. You can see it's in a channel between 277.50 and 279.20. We want to take a top-down approach. This is where we are with our daily charts with the SPYs on the 1 minute. 279.20 acts as the upper range of that daily range, and we're hovering near the top of that range. So we're in a strong uptrending market. The Qs had broken to all-time highs recently and are very nearly towards those all-time highs. The tech sector is very strong. It's outperforming. This makes it more likely that a stock that breaks out is going to go up. The overall sector is strong and healthy. That's evidence for us. Tick, very strong, mostly positive for the day. Very strong tick on the open, showing us that the market overall is strong. Okay, and now let's take a look at our daily charts. And this is the most meaningful chart that we've looked at to date. 32 is a very significant resistance level. Fails once at 32, twice at 32, 3 times at 32, coming back for the 4th time. Couldn't get above there another time. So 4 times it couldn't get above it, and now it's approaching it for the 5th time. It's doing a really nice job of holding this 30-ish area. So the pull-in from 32 is not particularly strong. That 29 had acted as significant support. 32's resistance, and now we're holding this nice bowl-shaped pattern a little bit higher, and we're starting to slowly creep up towards our resistance area. 32 above is our signal. We get above 32, we've got a trade decision. This is a very clear resistance level on our daily charts. If we get above this 32 level, that's really going to capture our attention. When we look at our 5-minute chart, DBX breaks through 32. Daily resistance in the pre-market. The pre-market volume was 5 million shares. that's larger than the average daily volume for the stock overall. So in the pre-market, we're already getting elevated volume. And now we're above that price. That's telling us the stock is really in play and that there's lots of interest in owning the stock. On our 1 minute, you can see it had a really, really solid run. I like to look at our volume when we get above 32, and you can see elevated volume. Let's talk about that specifically, though. So we note that we want to get long this DBX when we get above 32. We get above that daily resistance. We open up, we get that strong opening drive. So we talked about this, right? We want to move away from price. I talked about this in one of our variables. I want a sharp move away from price. That's one of the variables that tells us that the daily breakout is likely to work. Okay, and so did we get that? You damn right we got that. Excuse me, we did get that. And then, look, the other thing we want to check for is, did we get let's go back to our list of variables. All right, do we have elevated RVOL? We do. Are we above an important technical level on our daily charts? We are. Do we get a volume spike into that breakout? Let's see. We did. We get a volume spike right there. Okay, and then now we want to look for decreasing volume and a shallow pull-in. We get that. We look down at our volume down here, decreasing volume coming in. We're holding above VWAP. The purple line is VWAP. So we're holding above VWAP. That's one of our variables again. We're holding cleanly above VWAP. And so when we pull into that 33 area, we have a trade opportunity to add to our position. So we want to own some when we get above 32. Ideal to own this in the pre-market as it's getting above 32 and volume is elevating. Ideal to buy some on the open for an opening drive when it's holding above 32 and showing you the push to the upside with volume. And you want to buy more. You want to buy more. This is working. This trade is working. It's holding above VWAP. You're getting the variables you want for your breakout trade. It's time to put on risk. And one of the things that is done very well in this trade is selling into strength and buying back into weakness. A really good best practice that experienced traders employ when they have a thesis and they're right is to take profits into strength and to find areas to buy back into pull-ins. That way that they make cash flow in the direction of the breakout. They're holding their core and they're making cash flow along their core by selling into spikes and buying into pullbacks. And you can see right here, we're getting an opportunity to sell into strength as there's unusual volume that's coming in and it's signaling a move could be reaching an end. And so, again, as we look into this trade a little bit deeper, 36.50 is our target for our second lot because it wicked through that level and came back down, potentially showing the uptrend move needs a pullback. So we're taking off. And we pull back into VWAP. We want to put some more back on. So we're taking off. We're putting back on. We're holding our core. DBX shows strength and breaks through the prior high. So we're looking to hold 2 lots for a new high. We're selling the second lot when a new high is made and then a pullback. And right here, this is a good place to sell. You're getting out because it's got a double top, triple top, failing to break back through this 3809 area, slowing up, not making new highs, really far away from VWAP, looking for reasons to exit. It's not going higher, lots of risk in terms of a pullback. And so This is a trade that I asked one of our newer guys to outline for you guys. And this is how he attacked it as one of our newer guys who traded this pretty well. As you get a little bit more experience, you'll trade it even better. But he did a nice job on this. He did a really nice job on this. And, it all emanates from the variables. This is what you want to say for a breakout trade. These are the conversations you want to be having in your head. Is it above an important daily resistance level? Am I seeing elevated R-vol intraday? Am I seeing a volume spike into a breakout? Am I seeing a sharp move away from price? I am. Is it holding above VWAP? It is. Am I seeing decreasing volume into a pullback? I am. Is there buying in the tape into the pull-in? There was. Is the market overall in my favor? It was. Are the corresponding stocks and the sector in my favor? It was. Was there a new news catalyst? There wasn't. Is there a hot sector? Is this in a hot sector? It is. Short interest not on my side. You want a reason to hold. So we're getting almost all of these variables, and that's giving us confidence to put a trade in our playbook. And so, one of the things that I just sort of say, and I'll go back to this list again, one of the things that I say with traders who are underperforming from elite traders are the underperforming traders are not thorough enough with the variables they want to see in these breakouts. And maybe they look for two variables. It gets above the price and it moves nicely away from price. Or if it gets above the price and it pulls in, has a shallow pull-in. That's not enough. That is not detailed enough. That's not thorough enough. That's not enough conscientiousness from you as a trader to be a consistently profitable trader. But when you start to add these variables, it really does make a difference. And look, I saw that with just very recently with one of the seven-figure traders that I'm working with, who's already making a lot of money. It made him better. This is what we're seeing on the desk. It's the thoroughness, it's the conscientiousness that really makes a big difference. Okay, and I always like to end the playbook trade with a trade review, how I could have traded it better. But the training technique that I want you guys to take away is building playbook trades. Give it a title. It's a daily chart consolidation breakout trade. Come up with a trade strategy. What are the variables that I need to look at to make a trade decision? What are the variables that help me and are on my side that give me confidence this is going to work? What are the fundamentals of the trade? Got to know them. That goes as one of the that's one of the variables of the template. I got a title. How am I going to trade this? What's my trade strategy? What are the fundamentals? What's the big picture for the stock? What's my big picture? Okay, what's my big picture? Okay, I got my big picture. What are my longer term charts telling me in this particular name? Okay, I got that. What are my intraday charts telling me about that name? Okay, I'm going to put that in. What's my trade entry? Okay, I'm going to put that in. What's my trade management? Okay, I'm going to put that in. How am I going to trade this better? That's what goes into a playbook. And what you do is you leaf through this over the weekend of your A+ setups, and you start to internalize these trades and get better at them. So what you learn from our chat here today is the path to becoming a consistently profitable trader, a training technique to help you become a consistently profitable trader, a powerful trade setup to help you become a consistently profitable trader. We say CPT. How to develop a trade like a pro, which is probably the most important thing with these depth of variables, not a lack of depth, not a couple, but a depth of variables. How to build your trading business with a playbook. Just trade your playbook. Capture trades that make sense to you, put them in a playbook, and stick to those. All right? So And I just want to make one more comment about becoming a consistently profitable trader. Exposure to trading setups with edge. All right, you got to go find experienced traders or train and learn setups that measure and test well. You got to experiment with them in real time or on a demo. You've got to be developing a playbook of the setups that are best for you. Building that playbook. And you got to trade your playbook in real time. This is what we work on with our traders on our desk. This is what helps them in great measure to be successful. And so this is what we're sharing with you as to the work that we recommend you ought to get to right now after this chat so that you improve. All right, great. And so, hey, this stuff is really effective. Put your head down and do the work. It really works. So, look, I get a lot of emails, and I talk to a lot of people who lament, I'm not a CPT. How do I become a CPT? You're not a CPT yet. You're not a CPT yet. It doesn't mean you're not going to be a CPT. It means you're not a CPT yet. Start training well today. Train like a pro. Build a trading business of setups with edge and a playbook. And really only then are you going to learn just how good you can be. I finish my second book, The Playbook, with this quote: "You can be better tomorrow than you are today."
Hey, so please click our subscribe button so you don't miss any of our trading videos produced for our trading community. If you want to learn more real-world setups, 4 of them to be exact, that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click this link to sign up for your free webinar now. You're going to learn more in a couple hours from this webinar than from years of online education.